Does this contracted yield curve mean that the Fed is making a policy error?
I don't think so. I mean, I think I was asked this question the same time last year and the same time the year before that. And, you know, in terms of policy, I mean, the signal from the yield curve is really, you know, for the economy, is it inverted or not? You know,
so until it inverts, you don't care?
Not really. I mean, I think financial conditions have tightened somewhat. You know, in terms of the yield curve flattening, the yield curve typically does flatten in a Fed tightening cycle. I mean, that almost always happens. The question is how quickly it flattens. And, you know, right now, I mean, remember that investors aren't really getting compensated for duration risk on longer-term Treasury bonds because the term premium, as everyone knows, is basically negative. And so, you know, that may actually muddy the signal of the yield curve to some extent. You know, I also think the yield curve is probably right now a little bit too flat. And that's because I think it's underestimating what economic growth is. You know, the Cleveland Fed does an interesting exercise where they basically take the yield curve and try to predict what that means for forward GDP over the next, you know, four quarters or so. And right now, the message from the yield curve is basically real GDP growth of about 1.5% over the next year. I mean, good luck with that forecast.
Okay, so what does this mean about unemployment?
I don't really think it means anything for unemployment. I mean, you know, to me, financial conditions generally are still fairly accommodative. You know, interest rates have backed up a little bit at the long end. But if you look at, you know, rate-sensitive sectors like housing, despite this backup in interest rates, we've seen mortgage purchase applications, basically a very rough proxy for home buying demand, up about 8.5% over the last year. So, you know, to me, that suggests that, you know, despite the backup in rates, user costs for housing remain quite low, and that's good for the overall economy.
Is it a surprise to June 30 that we have a Fed that backs off a little bit? They get out there, they do their speeches and all that, and they migrate from 4 to 3 rate hikes. Is that really the surprise?
Well, I don't know if they'll migrate from 4 to 3 because they're not yet at 4. They're at 3. I mean, I think what they'll do is probably leave their rate forecasts in place. You know, most of what we've seen in terms of Fed hawkishness is really just those that looked for 2 this year moving up to 3. We've seen a coalescing.
That's a dynamic, okay.
I don't think we've really seen that much in terms of, you know, we've seen some move from 3 to 4. But, yeah, I mean, I think it's going to come down to inflation, and I don't really think inflation's much of an issue right now.
You know, maybe we've got wage growth as well to look at.